So hello YouTube, it's CalFX here and I'm back with another one. So in today's video I'm gonna talk about a very profitable gold strategy. I mean, this is a strategy that basically we used on a lot of the usual forex pairs such as Euro USD, Euro GBP. But I just really want to talk about it because I've seen a lot of consistency in gold with this system. It's a system that I usually swear by. I trade this system on all pairs. So I'm gonna talk a little bit about a trade that I caught this week on gold. It was a very good trade. I think it was almost around to 1 to 85, maybe 1 to 100, right? So we'll check it together. But it was a very good trade. It's consistent with the way we execute all our trades, whether we trade in Forex, gold, or whatever, even if it's US30, Bitcoin, it's all the same, right? So on this one, I really want to talk about also an important thing about how to predict how to predict how certain moves can happen in the market. For example, a lot of us have learned that in order for us to sell, we need to wait for M30 break of structure to the downside, right? So you have a supply zone and then you wait for price to come back, and then you drop down to lower time frames, you look for a change of character, and then you take a trade, right? So a lot of people, it's like if there is no medium time frame supply zone or high time frame supply zone mitigation, there is no trade. But sometimes price can give you a sign that a bearish sentiment the market is stepping into, is stepping in. For example, let's say you have a structure like this, price is going up, and then it pulls back, and then it gets into it creates this lower high, right? So basically I like to consider this to be a high reluctancy. Is price actually failing to create a high? And a lot of the times this can be a sign that the bullish sentiment in the market is in depletion and sellers are actually stepping into the market. So let's say I'm on the M30 time frame and I see this high, I see this low, then I see this high. And then price comes into, for example, it can be a demand zone mitigation, it can just be a simple pullback. But then price actually struggling to actually break the previous high to maintain the overall bullish order flow. So sometimes you can find opportunities right here on the lower time frame that you can sell and ride the violation of this previous low. So by the time this will be a change of character, but you already took a sell somewhere here. So you can even wait for price to come back, but this can be a very nice opportunity to sell because you're actually looking at what price actually showing you at the moment, that the bullish sentiment in the market is in depletion, and most likely we're going to have sell positions actually stepping into the market, right? So that's basically what I want to explain on this one, is that sometimes you don't have to wait for higher time frame POI mitigations in order to take a sell. You can actually wait for these situations where price shows you the intention, right? That's the intention, is you see price is going up and then eventually starts to fail, right? You can see multiple attempts of price trying to go above the previous high, and then eventually you start to see this low, because this low actually becomes weak, right? It's weak because it failed to create a high, so eventually price ends up taking that low. So that's exactly what I'm gonna explain in this video. With the gold trade that I caught, it was exactly the same concept. So for this one, for example, let's look at gold from the 4-hour time frame. That's basically what I looked at, and I think I always say this when I do the overall some of the previous videos and the weekly outlook, right? I always say that as an intraday trader, your higher time frame is supposed to be the 4-hour, right? So if we look at what's going on right here on the 4-hour, we can clearly see that the overall structure is bearish, right? It's very clear. We had this high, we had this low, and then we had this high. So price ended up breaking the structure right here, and then it pulled back. We can see this was like a 50% pullback, right, which is very good. So we had a pullback towards this supply zone, and then price made another low, right? So right here we have on the 4-hour bearish confirmation, right, that we have shifted from bullish to bearish. We have the two breaks of structures to the downside. So price then pulled back towards this zone. Now some people will say, okay, what is the order block here? As we know, it's the last up candle before the down move. So we could have chosen this one right here, this whole candle, or we can just keep the fair value gap. That's what basically what I did. I kept this fair value gap, and that's where price actually tapped before it started to drop. But we can say, okay, the last up candle before the down move. Okay, let's consider this whole candle right here, the blue candle, right? So that's the order block. Once price comes, so this is the 4 hour, right? So this is a 4 hour supply mitigation. Once price comes to my 4 hour, I need to drop down to medium time frame. So I need that relationship, higher time frame, medium time frame, and lower time frame. So as an intraday trade, the 4 hours is my high time frame. So once price comes to my 4 hour supply zone, what do I do next? I drop down to medium time frame. Medium time frame is gonna be M15, M20, or M30. So let me drop down, for example, to M20 on this one. So we can clearly see what's going on in this moment. So in this moment, if we read the structure, we can see that we had the structure high, we had this low, and then we had this previous high. And then price pulled back, made a low right here. And then what happened? Price started to attempt to go up right here. We wanted to see that push above to, you know, if price is gonna maintain the overall bullish order flow, we're expecting price to take out the previous high. But it started to fail. So that's what I call high reluctancy. Is price actually failing to create a high. So that's a sign right there that price, that maybe the bullish sentiment in the market is in depletion and we having sellers stepping into the market. So once I saw this, I said, okay, this was a high and this was a low. Then this was a high and then this was a low. And this low actually failed to do its job, which what was the job? Was to take the previous high to maintain the overall bullish order flow, but it failed. So that means that this low becomes weak, right? So this is a weak low and most likely is bound to be liquidated. So that's the overall outlook that I had on this trade prior. So for example, if I play, if I push price right here, so I started to see price struggling to go above, right, the M20 previous high. So I immediately dropped down to lower time frames. I think I went to M3 time frame and I saw something very nice. Let me quickly put it like this. So that's exactly what I saw right here. Is I wanted to see the shift, right? So we can see that price actually, when it came here, we had the first break, then price actually had a nice mitigation, then a second break of structure. This could have been a nice opportunity to sell since we have that first attempt, right? This is the attempt of sell order flow, right? So we have the change of character. Then price came back, respected the change of character point of interest. Then we had a second break of structure. And most likely we were supposed to expect price to come back into this supply zone, right? So, but price kept dropping, actually didn't come back into this supply zone, it just kept dropping. So I saw again that play, right? So I saw the break, mitigation, the second break of structure. I said, okay, I'm taking this zone right here, which was the extreme point of interest. Some people will say, okay, why you chose this candle? We can drop down to lower time frames, for example. Like, let me go to 2 minutes time frame so we can see the refinement. Maybe 1 minute. I believe on the 1 minute we might see something. Okay, perfect. Right here we can clearly see this candle alone and we can see the fair value gap. So basically this was like inducement. Price came and attempted to go down, but the price continued to push. So we can see the reluctancy here, right? As price went up and then it failed to come below, so this high became weak. Price ended up sweeping and coming to the extreme. So once price came here, that's when I dropped down to seconds time frame. So I actually took a very nice seconds confirmation on 5 seconds as to reduce my stop loss and dramatically increase the risk to reward ratio. But as you guys can see, it was a beautiful play right here, right? Just waiting for that break, wait for price to give you a two confirmation, right? Price breaks and comes back to respect that break and then wait for the second one, right? So that's what I did, and price came back. I went to seconds time frame. It was a beautiful 5 seconds confirmation. So let me go back to 3 minutes time frame. That's when I took the trade. It was a 30 pip stop loss right here on gold. I mean, it's very small for a pair like gold. And my intention, just let me go back to M20, which that's the medium time frame, right? So my intention, as you guys, as I was able to explain before, we had this high, this low, this high, and then this low, and this low failed to create a high, so it became weak, so it was bound to be liquidated. So my target actually, I took actually partially 1 to 11 on this one. I took about 95% volume, and then I left the rest. I wanted to see price coming into to liquidate this M20 previous low, right? So if I play price a little bit, we can see, I mean, price just moved very, very nice right here on gold. I mean, that's just how gold is. And we can see price ended up taking out that weak low. So all of this just became liquidity because price actually failed to create that high. So this low also was bound to be liquidated eventually. So we can see price ended up, you know, coming all the way down. So I also held the trade all the way down right here, was about 1 to 117 risk to reward ratio. So let me just keep playing price, and then the final goal, let me go back now to 4 hour, right? So that was medium time frame. Let me go to 4 hour. The target was to see price coming down to this 4 hour previous low, just to maintain the overall bearish of the 4, because we know on the 4 hour we are bearish, right? So I want you guys to understand the relationship that we had here of the higher time frame, which is bearish, medium time frame turned bearish, lower time frame bearish, everything in alignment. That's why this was a very high probability trade. So we can see here price eventually started to pull back. You know, for me it peaked at 1 to 17 risk to reward ratio, but we can see the NFP news came in. I think I will still be in the trade, but on MT5, because I trailed stop a little bit, I ended up getting taken out before the news. But price came exactly to 4 hour right here. I mean, this would have been a beautiful, I believe, like a 1 to 43, right? But for me, it ended up picking a 1 to 117 risk to reward ratio trade. So right here at the right, you guys have the MT5 execution of this trade to see that we walk all this YouTube talk. I mean, we do this every day, every week on the group. We trade together, and you know, I actually ended up calling another good trade this week, which was on New Zealand dollar. You know, a lot of people in the group caught it. I mean, it was a beautiful one that I called for the students. So, you know, fair play for all the people that executed their trade in the group. And guys, that's it, right? It's, I mean, it's all the same thing. That's what trading is supposed to be. It's all about, you know, it has to be the same process every single day that you repeat, because that's where the edge is at, right? It's by doing the same thing over and over again, focusing on risk to reward ratio. That's what's gonna save you in this business. You know, you don't have to have a high win rate. If you have a good risk to reward ratio, you're good. Okay, so I hope I made the point clear with this video, guys. I mean, if you guys enjoyed the video, make sure to show some love to your mentor. You know, let's smash the like button, guys. Let's make sure we smash the like button. I mean, you don't lose anything by hitting the like button. For me, you know, show some love in the comments, and you know, if you're interested in joining the mentorship, my contact is on the description box below. I'm always available, always free to chat with people. And also, if you're willing to join the automated trading service that I just launched, I mean, very good stuff. Feel free to reach out, and I'm gonna see you guys in the next one.